With the pace at things with which things are changing at this stage, it must be very difficult to forecast the end of the year, never mind next week.
Well, certainly there's not a lack of things to talk about, and that's true when you think about the biggest and broadest of global issues right now, and right down to the small bottom-up issues in South Africa. Everything's at play. It's a tremendously interesting time. In terms of the core message that we brought today, the core message was, let's watch out a little bit about our own growth figures, not because we're necessarily concerned about the pace of the South African recovery, but things like the strikes are going to have a big impact on the near-term figures. We saw that yesterday in manufacturing data, for instance. The message is that, by and large, we feel even more comfortable about the inflation outlook than we have done recently. Part of that is because we think the rand's going to be pretty strong for quite a long time. And what this means at the end of it is we think there's a very real chance we're going to get another interest rate cut this cycle.
Well, just looking at the retail sales number that came out yesterday, and I think a big shock to many economists, because most were talking about close to 8% growth year on year in August, and it came in at 4.6%. So it was quite interesting that we saw quite a big divergence in terms of what was expected and what really came through. What were you expecting, Jeff?
Well, I think it's very tricky, right? Because we had the June numbers that had some World Cup in them. We had the July numbers that had the World Cup in them. We know the August numbers can't have the World Cup in it. Yeah. So you're getting a very difficult period where you can be missing numbers by quite a lot on either side. It wasn't very long ago. It wasn't very long ago at all that a number in the upper fours for retail sales would have put a big smile on our faces. Then we got those big numbers around the World Cup. I'm not convinced that this 4.7 says that the retail sector is really decelerating in the same way. I don't think a lot of the Q2 data said we're in trouble. In the same way, I don't think the manufacturing data says that we're in trouble. What we have are some data that's very difficult to read around the World Cup. We've got data that's very difficult to read around the long public sector strike, around specific strikes in certain industries. It's very difficult to look through the monthly numbers right now and really get a clearer direction on where we are likely to go. But in that, looking at that crystal ball and trying to look forward, we have record low interest rates here in South Africa. We have an economy that seems to be recovering. We have wages, at least on the consumer spending side, you have wages growing fairly strongly. All this suggests to me that we have a pretty good basis here for an economic recovery, at least when looked from above. When you look from below and you see all these poor guys out of work, it's much more difficult, and the stories are going to be much more barbelled.
Well, a month ago we had economists, we had the Treasury, the Reserve Bank, even the IMF upgrading their growth forecasts for South Africa this year. Do you think we might see a few downgrades as we head towards the end of the year if we do continue to see figures like this coming through?
Well, we've gone in the opposite direction, but I think we started from a much higher basis. So we've just recently had to reduce our forecast.
Absa Capital.
I think so. We're pretty bullish, right? We're pretty bullish global growth as compared to consensus, though there we pared our numbers a little bit. We're still pretty bullish growth here in South Africa. We had been forecasting for this year somewhere around 3.3. I think that was on the high side of consensus. We've reduced that forecast down to 3%. I think that's still pretty rosy.
Pretty good, yeah.
Yeah, I think it's pretty good. And what's important is that what's causing us to reduce it isn't an underlying weakness in the economy. Again, from what we see underlying, I'm more and more convinced that the economy is fairly broad, the recovery is pretty broad-based. What we're having to do is adjust ourselves down for one-offs, things like strikes.
Well, Jeff, you were saying that we could see another interest rate cut. It seems that many were talking about Jill Marcus missing the opportunity to cut by 100 basis points at the previous MPC meeting. Do you think that we'll see another interest rate cut purely to spur economic growth, or do you think it's going to be with the agenda of trying to perhaps get foreign investors to move away from the local currency?
Listen, I think that the logic behind another rate cut is a third reason, right? And the third reason is that the inflation outlook continues to surprise on the downside. So I think if you look back over the last 13 monthly readings in inflation, it hasn't once surprised economists to the high side. And 9 times it's been lower than expected. Only 4 have we got it right. And my expectation is that, thanks in part to the strong currency, it's going to continue to surprise in that direction. So the low inflation outlook provides the space for the Reserve Bank to deliver a rate cut. Of course, the rate cut has one eye on helping to spur the economy even more. Whether that rate cut in isolation would do much to pull some of the strength of the currency away, it's far less clear to me. What have we seen so far? What we've seen so far is every time you cut rates, it generates a further bond inflow, which at the end probably generates more currency strength. That doesn't mean that there isn't some level of interest rates where the rand becomes unattractive, but that level of interest rates is probably so far from where we are right now, it's probably not the right interest rate for the domestic economy. So I don't think 50 basis points suddenly makes the rand unattractive to global investors.
And of course, cutting interest rates isn't really a cure-all for the economy either, is it?
Well, at some point you're pushing against a string. We see that in a number of economies. Interest rates everywhere are remarkably low. We're record lows here, we're record lows there as you move around. It's far from clear that on the consumer side, for instance, that interest rates are actually causing sort of a concern or a worry or withholding the ability of consumers to make purchases. We know that credit extension to consumers is positive, i.e. banks are still lending to them. And they're small numbers, but they're positive. We know that even as consumers have quite a lot of debt as compared to their income, thanks to the rate
Which is
cuts.
around 78% debt to income ratio.
It's about 78%, but remember with record low interest rates and all of that getting passed through, even though the debt level is much higher than its 10-year average, the cost to service the debt, the amount you pay out of your pocket each month to make good your bill payments, is much lower than its 10-year average. So there's plenty of evidence to suggest that there's more space in pocketbooks for consumers than there would otherwise be. And you see that reflected in things like consumer confidence, right? Consumer confidence, even with 78% of disposable income in debt, so high levels of debt, even with more than 1 million job losses, you see consumer confidence significantly above its medium-term
Retail
average.
sales at around 14-15%. I think that was the big high that we saw when it came to the retail sales number, and I think we hit it around 2006. Could we see that kind of number anytime soon?
Let's hope not. Right? I mean, as fun as that was to be driving around in brand new cars and big fancy TVs and just try to avoid the credit card bill.
I definitely have. I'm waiting for Jeff to learn his though.
What we had in that period was an economy that was running in an unsustainable fashion. We were seeing
as the global economy was at that stage.
The global economy was here in South Africa. You had not just retail sales printing 14 or 15%, but at the top level macro, you had real household consumption growing 9, almost 10% in some periods. That was well faster than what the South African economy could support. We saw that emerge in an enormous current account deficit, which left us very vulnerable to global trends. We saw that in terms of our own capacity. Listen, it's not for nothing that we ran out of electricity at the beginning of 2008, that the roads got very busy, that the ports couldn't cope. The economy can only grow so quickly. So I think what we need to be looking for is a consumer that's participating in the recovery, saying real growth in spending of 4 or 5%, maybe 6% in a good year. That's very healthy. You'll see that in the shops. People will have smiles on, but what they won't be doing is generating a massive amount of debt at the same time.
Jeff, how about jobs? Because we know we've heard figures bandied about that we'd need 6-7% growth to really make a dent in unemployment in South Africa. And of course, there are lots of people sitting without jobs. There are threats of more job losses if the rand continues strengthening and putting pressure on the manufacturing sector. How do you think we're going to get out of this spiral of job losses?
Well, listen, it's not just the currency. Let's be clear here. Let's look at the manufacturing sector and things like the automotive industry. The automotive industry, depending on what part you look at it, just gave 3-year wage contracts between 9 and 10% per year. So over the next 3-year, wages will increase in that sector by 1/3. So do I believe that the automotive sector doesn't have competitiveness problems? No, I have no doubt they're very concerned about their competitiveness. Is the rand sort of a quick short circuit way for them to get out of a particularly sticky issue? It probably is, but it's far from clear that businesses so far are doing enough themselves in order to ensure their competitiveness. The idea that the rand will save them, listen, I think that's wishful thinking. When I look across economies everywhere in the globe in emerging markets, when I think back not just in this period, but over the past 15 years that I've been covering emerging markets, countries can hope and wish and pray for whatever exchange rate they think is fair. In my experience, countries don't get that. Countries must learn to live with the exchange rate they have. And that means a focus on those things that we can control, things like wages, things like efficiencies, things like red tape. The exchange rate's going to go more or less where it's going to go. And that means for the next little while, it's going to be pretty strong. I have no doubt there's a period when it's weaker.
How much stronger do you think?
Listen, it depends what you measure it against. But what we know everywhere right now, in terms of developed markets, whether you believe that the world is coming to an end, and there's a certain set of people out there who believe that the crisis of 2008 was just a foreshadowing of what we're about to come up to, or at the other side, sort of as happy as you can get is, well, the world's not coming to an end, but it's certainly going to be a difficult period. That entire range of views tells you that global interest rates are going to remain very, very low. And in that environment, what you're going to see is money look to be put to work at higher yielding assets, whether it be emerging market equities, whether it be emerging markets fixed income. The money is coming. It's not going to stop. That means that the pressure, not just on the rand, but lots of currencies to be as strong as they are today or get even stronger is going to be significant. Certainly things with 6 against the dollar are likely to be with us for some time. The one little fly in the ointment, as it were, let's watch for the budget statement. We're only a couple weeks from that. Certainly in our own forecast, we've got a little blip up in the currency on the view that the language around the concern around the rand will be sufficient, that will be sufficiently strong, or that a measure in this direction or another direction might be announced, not to really change the path of the currency over the medium term, but maybe we get a little excitement on the day.